The Australian Financial Review.
When Barrenjoey set up 5.5 years ago, not everyone was convinced the crowded local market needed another investment bank. Global giants like UBS, Goldman Sachs and JP Morgan were already fighting it out with the country's homegrown success story, Macquarie Group. But the gamble paid off as the clients rolled up, and on April 10, shareholders in Magellan Financial Group are expected to approve a merger deal with Barrenjoey that will value the startup investment bank at $1.6 billion and ensure its staff an almighty payday.
There'll be a big payday as part of this deal because Barrenjoey's biggest shareholders right now are their staff. This deal has lifted the paper wealth of Barrenjoey's 463 staff to over $1 billion.
Welcome to The Fin. I'm Lisa Murray. This week, senior reporter Jonathan Shapiro and co-editor of the Street Talk column, Emma Rapaport, on why Magellan and Barrenjoey are tying the knot, what it means for all the big names involved, and whether there's room in Australia for another millionaires factory. It's Thursday, March 26. Hi, Johnny. Hi, Emma. Thanks for coming on the podcast.
Hi, Lisa. Thanks for having us.
Hey, Lisa. Great to be here.
Johnny, Magellan has announced it's buying the 2/3 of Barrenjoey that it doesn't already own for just over $900 million. The deal's been called everything from a merger, a tie-up, to a reverse takeover. Chanticleer columnist Anthony McDonald described it as a case of the kids buying the parents' house. Tell us about this closely watched deal. How will it work?
Well, earlier this month, Magellan, that's the big ASX-listed fund manager that was started by deal makers Hamish Douglas and Chris Mackay about 20 years ago, announced that they would be merging with Barrenjoey, which is basically a startup investment bank that was created out of nothing about 5.5 years ago. So Magellan, which is listed, which means it's publicly owned and trades on the ASX, is buying the 2/3 of Barrenjoey that it doesn't already own because it was one of the original founding investors in the investment bank when it took about a 40% stake when Barrenjoey was set up.
Week started with some pretty big news that Magellan Financial is going to be merging, taking over Barrenjoey.
Now, Magellan is paying for the business by issuing its own shares to Barrenjoey shareholders,
Valuing it at just over $1.6 billion. So this is something that the market did not necessarily see coming.
So Barrenjoey was a private company, which Magellan had a share in, and now they're merging, and the way they're merging is that anyone that owns Barrenjoey shares now gets Magellan shares, and the deal and the terms of the deal value Barrenjoey are at $1.6 billion.
They've gone from nothing 5.5 years ago to $1.6 billion.
Yep. And the original investment was about $156 million. Now it's been called a reverse takeover, and that's probably quite a fair description because while Magellan is buying Barrenjoey or buying the stake it doesn't own, Barrenjoey will end up with most of the control. So the chairman of the merged group is David Gonski. The CEO of the group is Brian Benari, who's the CEO of Barrenjoey. And quite recently, our colleague Joyce Malakis revealed that the name might change too because what Barrenjoey have done is reserved the ASX ticker BJY, which suggests a name change might be on the horizon. Currently, the entity is MFG, which is the Magellan Financial Group, which is listed on the ASX. So by all accounts, it does look like a reverse merger. And the reason why Barrenjoey is in control is because it's really become the main growth driver of Magellan. So when the deal was put together all those years ago, Magellan was the powerhouse, not Barrenjoey, and now that has flipped.
So Magellan has been struggling while Barrenjoey is on the up. Let's look at each of these businesses, starting with Barrenjoey. Emma, as a columnist on Street Talk, you spend a lot of time looking at the investment banking world and who's winning deals. How has Barrenjoey gone from zero to a company worth $1.6 billion in 5.5 years?
So Barrenjoey was started by these two larger-than-life investment bankers, Matthew Grounds and Guy Fowler. And they worked together for a long time at UBS, which is a different investment bank. And Guy Fowler was more known as the behind-the-scenes wheeler and dealer. Very smart, very driven. whereas Grounds markets himself very, very well. And both are very charismatic.
And Grounds is probably the more high profile of the two.
Yes, definitely. But they're both just as hungry as each other. Both have these incredible networks and use that to start a new investment bank. So Magellan, which was founded by Hamish Douglas and Chris Mackay, they'd worked together in the industry with Grounds and Fowler at UBS for quite some time. They went to the founders of Magellan and asked them to help fund their new venture, their new investment bank. And Magellan gave them $156 million for a 40% stake in the business. And then they also got some financing from a British investment bank called Barclays. And collectively, with those two sources of funds, they started a new investment bank.
Which doesn't happen every day.
Well, it hasn't happened for a while. People that have been around for a while remember Macquarie getting started. But Australia's banking scene is largely an overseas story. A lot of overseas banks from Switzerland and from New York, they've come here, they've set up big offices, and they're the big dominants of our banking scene. But now we have Macquarie, we have Jarden, which has come over from New Zealand, and now Barrenjoey, so another homegrown investment bank.
And how did Barrenjoey do it? How did they establish themselves and grow so quickly?
So I think the question at the start was, could they really take on the UBSs, the Goldman Sachs of the world? It was a very, very ambitious idea. So they went on a hiring frenzy and they gave their new bankers a lot of equity in the business and attracted some really good people. People remember the day that was called the Bloody Monday raid on UBS. Guy and Matthew were taking a lot of their former staff and bringing them across to Barrenjoey. And then they also hired from their competitors. And all of a sudden, they had some really good big names there banking for them. We have this phrase on Street Talk that we use, which is elbows out. And that's really a descriptor of how these aggressive bankers make sure that they make it onto a deal. This raid on their competitors, on their other investment banks, has worked out really well for them. They're definitely in the top 10 of the league tables, both on M&A and equity capital markets. They have their name against some really good big deals. So in the aftermath of Bloody Monday and this sort of elbows out way of doing banking and building a business, they really developed a reputation in the industry as a disruptive force. And roll forward 5 years, despite all the stresses and the strains and the ups and downs in markets and some good years and some bad years, they've actually done remarkably well. And what's interesting is on the other side, Magellan has gone backwards.
And Johnny, what happened at Magellan over that time when Hamish Douglas backed Barrenjoey? Investors criticised him for spending money on a side project. But now that side project, as you said earlier, accounts for most of Magellan's earnings growth. What happened at the fund manager? Why have the fortunes gone in the opposite direction to Barrenjoey?
Well, Lisa, Magellan has been a fascinating story over the last 20-odd years, and it's been the subject of previous editions of this podcast.
It has.
But it began as a struggling investment company set up from a shell company that was created by the yet-to-be Prime Minister Malcolm Turnbull. And it was sort of taken over by two deal-makers, investment bankers at the time, Hamish Douglas and Chris Mackay. They didn't work together. They were rival bankers, but they were friends. You know, they really had this lifelong dream of becoming fund managers and investors.
What Warren Buffett would say is
they always would travel to Omaha every year to the Berkshire Hathaway AGM to hear Warren Buffett.
You should be greedy when others are fearful and fearful when others are greedy.
And yeah, they had this love for investing, and this was something they always wanted to do. And they also had good business acumen because Australians were getting wealthier, they were growing their superannuation piles, they were growing their savings, and they tended to be overinvested in Australian equity. So there was a real opportunity to attract, money overseen by financial advisors into global equities. And it was only really Platinum at the time that was doing it. So if they could go toe-to-toe with Platinum, it was a huge market of money that they could attract. They were investing in great companies that we've all heard of, like Yum Brands, Nestle, American Express. So that was a real compelling pitch, and they did extremely well. They managed not to lose too much money during the global financial crisis, and that just set them up from post-2008 to build their credentials, raise money, attract all this wealth that was looking to diversify outside of the ASX. And Hamish Douglas and Chris Mackay, they were incredibly smart, very driven. They had good people around them, helping them with sales and marketing to financial advisors. And
a lot of attention paid on Magellan Financial Group this morning because it has been the sole best performing stock on the Australian index so far this year, gaining 160%.
It was an incredible success.
That's certainly significant for this financial group, which has been absolutely outperforming.
And they grew from almost nothing to over $120 billion of assets, and it had a market value of $12 billion. But, the first 15 years were terrific for the company. The last 5 years have been a real battle.
Now, shares in funds manager Magellan have suffered another sharp fall.
And now they manage only $40 billion, and the market value of the company has fallen to $2 billion.
Since August 2021, Magellan's funds under management have dropped from $118 billion to around $40.
So that's quite a drop. What happened?
The catalyst was COVID. They made some bad calls. Look, they were not catastrophic calls. They were maybe too conservative. They held a bit too much cash. And when the market ripped higher on news of vaccines and stimulus, they just didn't sort of catch the updraft. So they underperformed quite badly against their peers. They had a few positions in Chinese tech stocks that didn't work as planned. It was by no means catastrophic, but that sort of fed into a whole bunch of other issues. Hamish Douglas, who was the key man, he was the rainmaker, he was the face of Magellan, he was the main investor, he ran the company, he ran the portfolios, and he had quite a turbulent time in his personal life. He split from his partner. They lost some very key big mandates from the United Kingdom that helped get them up on their way.
This week we announced that St James's Place, our largest client, has ended their mandate.
And between all the management issues, the performance issues and the lost mandates,
People were saying we're about to dump our shares in Magellan. This is just absurd.
the funds management business was really challenged. It also was a very difficult time for the funds management industry.
Yeah.
And it's become highly competitive and highly commoditized. And for a firm like Magellan that's investing in big global companies, a lot of people think they can do that themselves. Whether they can or can't is a debate, but they charge quite a lot of money. The trickles turned into runs and the 120 billion just melted like an ice cube. They tried to turn things around. There was a lot of changes to the investment staff. They brought in new management. And while there were sort of signs that Magellan were fixing their investment performance, unfortunately, they haven't been able to do it to an extent where they've really been able to stem the outflows from their global equities funds and even attract new inflows.
Mm-hmm.
The other interesting aspect about Magellan around 2020 is Hamish Douglas made 3 private bets. So he went away from funds management and made 3 separate bets. One was a $90 million investment in Guzman & Gomez, the Mexican food chain, around a $20 million investment in a financial brokerage business called Finclear, and the $156 million investment in Barrenjoey. Now, at the time, Hamish Douglas could do no wrong, so, the deals were sort of met with approval, but there were some cynics out there that were wondering, why is Magellan doing this? Why are they venturing outside their core? Why are they putting capital outside of their highly successful and profitable funds management into these private businesses? And when Hamish left, there was an imperative to unwind them and to, go back to basics and go back to funds management. But Barrenjoey's revenues and profits have grown. It's, as we know, worth $1.6 billion. So the sort of growth of Barrenjoey and the decline of Magellan has actually reached a point where the tail is wagging the dog. The Barrenjoey business is the profit driver of the group. So one way to fix this is by doing a deal like buying the rest of Barrenjoey. To use Anthony's metaphor, the kids are buying the parents' house.
And Emma, as part of that merger announcement, we found out how much Barrenjoey staff are being paid. As you said, remuneration is part of the reason they've managed to attract good people, and they've been poaching a lot of good people from their competitors. Is this the Macquarie model? How does their pay compare to the other investment banks?
Yeah, so look, they've been pretty open that they want to copy what Macquarie does, and Macquarie has been incredibly successful. So it's probably worth putting some numbers behind that. So the merger announcement revealed that Barrenjoey staff were paid $154 million in the first half of 2026. That compares to about $295 million of income generated during that half year. And that means the compensation ratio, which is really the revenue divided by the salary cost, is around 52%.
Mm-hmm.
And the reason that number is important is that it's really more than the other banks are paying their staff. So Macquarie's compensation ratio is in the low 40s, and their US peers are somewhere between 30 and 50%.
So it's quite a difference.
Yes. And Guy Fowler, he jumped on a call with analysts right after the deal was announced, and he said that the company would seek to emulate Macquarie Group and pay their staff bonuses in the form of cash, but also shares in the new listed entity. Johnny and I actually wrote a piece about a week after the deal saying that there'll be a big payday as part of this deal because Barrenjoey's biggest shareholders right now are their staff, the people that work for them and that are employed by them. This deal has lifted the paper wealth of Barrenjoey's 463 staff to over $1 billion. That's an average of $2.3 million per employee. That's an average, so do take it with a grain of salt. But it does show you that, like Macquarie before it, Barrenjoey has become a real millionaires factory.
We're talking about the merger between Magellan and Barrenjoey that was announced earlier this month. Extraordinary wealth has been created from this deal. Emma, you just told us Barrenjoey is the new millionaires factory. Is that how it's being seen?
Yeah, broadly across the market it is. A lot of Barrenjoey staff, when they started, they were called founding partners. And they were given equity in the business in Barrenjoey. And even for years, as they were still hiring people, they would still bring them in as founding partners and give them equity. So they will own just about 32% of Magellan, the listed entity. So not only did they get founding equity in Barrenjoey, they also got, under this sort of complicated trust structure, bonuses and additional equity in Barrenjoey as the years went along. They sort of made it deliberate that it's a bit hard to work out. But if you just take that as read, there are some staff that have a lot more equity than others. There's about 463 staff that are in line for about $1 billion payday collectively. Because that's now tied to the Magellan share price, the shares rose aggressively after the deal was announced. That's fallen a little bit. Markets have been very volatile, so it's now 19%. They can't sell those shares on day one. They're what's called escrowed, so they're sort of held back for certain periods of time, some people more than others. But eventually they will be able to sell those, and that's where we come up with this idea of the millionaires factory. And the longer your shares are tied up, the more the bank values, in essence. So up to 9 years for their most senior guys.
Yeah, and because investment banks are purely people businesses, the talent is the asset of these businesses. And now that Barrenjoey is become a big part of a listed company, shareholders, investors really want to have the assurances that these key deal makers, the rainmakers, the people that bring in the money, are going to be at the firm for some time because, they've got to make an investment decision whether to invest in this company, in Magellan. So it was absolutely critical when the deal was announced that investors were given assurances that key staff were going to be around for the foreseeable future.
Johnny, there are a lot of big personalities tied up in this transaction. There's Matthew Grounds and Guy Fowler, who built a bank. Hamish Douglas's decision to invest in Barrenjoey in the first place is being reevaluated, and the Lowys have bought a stake. Tell us about the people involved in this deal and how they fared.
For Hamish Douglas, it does force us to reconsider his legacy. One investor I spoke to compared it to US presidents, so they might look down in the dumps once they leave office, but over time, events change and history runs its course, and you evaluate their achievements and their missteps in a different context. He left under a cloud, but that Barrenjoey investment has proved to have been very astute. As we talked about earlier, the struggles of the asset management business, this investment in Barrenjoey really has saved the firm to some degree. It's put it in a much healthier position than it otherwise would have been in. It has this sexy, high-performing, growing investment bank attached to it, and that's a story that can be sold to shareholders. So, yeah, I spoke briefly with Hamish Douglas on the day of the deal. And
did he feel vindicated?
Well, to be fair to him, he's very humble. He didn't want to say too much. He just wanted to stay out of the way for the most part. But he sort of gave a lot of credit to the team Barrenjoey for achieving what they'd achieved in 5 years. So while I think he was sort of probably quite happy with his decision or felt vindicated, he was very keen to acknowledge the blood, sweat and tears behind the success of Barrenjoey. So it was more than just an investment decision, but there was actual hard work and, as Emma said, a lot of elbows pointing outwards to get to this point. And the other personalities that have come into this are the Lowy family. Everyone knows who Frank Lowy is. He's worth about $10.3 billion. And that wealth was accumulated by founding, the global shopping centre brand Westfield, which he sold in 2017. His other legacy, of course, is the Lowy Institute, which is a political think tank. And there was an opportunity for the Lowy family to get into the action. They took a 5.1% stake in Magellan. Their participation was seen as a stamp of approval that, that the future was bright for this new merged entity. Frank's son, Stephen, said the families had a long relationship with Magellan and Barrenjoey, and he believed the merged entity would be a sound long-term investment. Another big personality is David Gonski. He was the chair of Barrenjoey, and he's also on the board of the Lowy Institute. He will become the chairman of the merged entity. And another big personality, as if there aren't enough, is the former governor of the Reserve Bank, Phil Lowe, who joined the Barrenjoey board a couple of years ago, but he will still remain on the board.
So there's some big names behind this deal. There's a lot of believers. Emma, was there any opposition?
I wouldn't call it opposition necessarily, but there were some detractors. This is really coming from the idea that the deal has valued the asset management business, the core of what Magellan has been doing since the early 2000s, at almost nothing. So, Barrenjoey had come in, made this really great deal, but essentially the shareholders that were invested in the asset management business got almost nothing for that investment. Magellan also has about $500 million of cash and sort of semi-liquid assets on its balance sheet, which you could argue is Magellan shareholders' money. And the activists have been saying for quite some time that they should just return the money back to shareholders in the form of dividends.
Rather than buy an investment bank.
Pretty much. And then the other sort of quote-unquote controversy is that the numbers that they used to sell the deal are probably the best year that Barrenjoey has ever done, and all credit to them. But on their balance sheet, that's what they got valued at. You can make the argument that, yes, they might continue to grow, and that would be great. But for previous years, there's been some pretty unflattering results. There's been some big losses as they were trying to build the bank. So should they really be getting 15 times their earnings, which was a great result, but is that the basis on which future results should be valued on?
So a final question for both of you. Do you think this is a good deal? Will Barrenjoey be Australia's second very successful homegrown investment bank?
Well, from a shareholder investment perspective, I think the bullish shareholders will just be thinking, let's euthanize the old Magellan. It's a business in structural decline, and grab onto the new investment bank, get on board, and just keep backing the winners to keep on winning. So that's sort of the upside is, get on board, join the party, and, make money alongside Barrenjoey. But some investors are more circumspect. They see the combined entity of a funds management business, tied to the fortune of global equities and global markets, now joined together with an investment bank that is absolutely tied to the health of financial markets. When markets are wobbling, deals are not getting done and, fees are not being generated. So they now see it as almost doubling down on the health of financial markets. And we've seen a bit of that already in the last few weeks because the deal was done, Magellan shares went up quite a lot, and then they've really struggled as the conflict of the Middle East has dragged on global equities, but also sapped confidence that there'll be a lot of IPOs and M&A. So there's a little bit of validation to that. But I guess thinking long term, the real bull case is the foundations have been laid for a homegrown Australian investment bank that really can take on Macquarie and emulate it and become the next Macquarie. And there's also a feeling that, maybe Macquarie's best days are behind it. They've had this growth spurt, they've had this young, lean, hungry, competitive culture that's almost not being passed on. And there's an opportunity for a new, pluckier rival to nip at their heels. So that's the bull case. I'm sure people in investment banking will have different opinions on that, but it's an exciting setup. There's a potential trade in there for anyone that really believes in this business.
Yeah, look, I think that there are a ton of people that expected and frankly some people that wanted to see them fail, but Matthew Grounds and Guy Fowler have really built a bank that people want to be at, that companies want to bank with, that fund managers want to trade with, and that's a credit to them. And it's a place that their staff want to work, that people want to be seen at being, and in 5 years, that's a really incredible story to be able to tell. And they had this big 5-year birthday or anniversary last year, very, very well attended, and really showed how far they've come. I do think, however, that now we've got to start looking at the future, and it'll be really interesting to see Barrenjoey be a bit more transparent with their accounts now that they're listed. Like any other company, they'll have to give outlook statements and they'll have to start thinking about the impact of AI on their business and everything else that comes with being a listed company. So as somebody that writes about them every day on Street Talk and watches and talks about them all the time, I'll be watching to see how they'll do over the next few years.
Thanks, Emma. Thanks, Johnny.
Thanks, Lisa.
Thanks, Lisa.
Thank you for listening to The Fin. I'm Lisa Murray, with Jonathan Shapiro and Emma Rapaport joining the podcast today. The Australian Financial Review has done some great reporting on the Barrenjoey-Magellan merger. To read more, click the links in the show notes. The Fin is produced by Mandy Coolin. Head of audio is Alex Gow. Fiona Buffini is head of premium content, and our theme is by Alex Gow. If you enjoyed this episode, send it to a friend as it helps others find us, and follow us wherever you get your podcasts. For more stories about markets, business and power, subscribe to the Financial Review at afr.com/subscribe. See you next week.
The Australian Financial Review.